Hey traders, welcome to the US equity update, starting with the S&P. As we mentioned in our FX update, that the S&P is at levels that remain extended on the higher time frames. As you can see, when we look at the higher time frames, we're definitely in that extended levels. And even on the lower time frames, we're at a level where we're deemed to be extended, at the very least overbought, and in place of concern. As you can see, we're approaching that 1-to-1 region, and that 1-to-1 region is the daily overbought area that we'll be very concerned about. The lower time frames, however, look pretty good for potential move to the upside following a little bit of a dip. So we can expect a continuation to the upside following this dip to the downside, as long as this dip doesn't become very extended. At the moment, it looks like we're looking at a running flat, potential running flat. That obviously could turn into an expanded flat. But if it does turn into a expanded flat, we'll have to re-look at what we're looking at. But basically speaking, we are looking for a move back down towards at least kind of 4,050, and then a rally back up to the highs. Obviously, if that dip goes even lower, the move higher becomes a little bit weighted down. So we'll be watching closely for this, but this move to the downside does look like it's on. And when you look at the structure within that, we have a nice, decent ABC corrective structure that's formed here. We're looking at this as an A, B, C. And like I said, either running flat or expanding flat. And then we'll see another rally towards the highs moving forward. So things are looking pretty good for the US equity markets on the shorter term, keeping in mind on the longer term, they are really extended. You need to be really cautious about getting into equities with any meaningful longer term viewpoints. So in terms of the Nasdaq did also have this little bit of a dip, and now rallying up towards making new highs, probably make new highs this week sometime. From there, the structure doesn't really have any clarity around it, so it's very hard to disguise or decide where we're going to be headed from here. Be really cautious with the Nasdaq, because it's also sitting at extended levels, even more extended than the S&P, and have to keep a close eye on rates as to what the potential move is in the Nasdaq and tech stocks. So the indexes are still looking pretty much overbought in the shorter term, and you just need to be really cautious. Overbought in the longer term. You just need to be nearly cautious about where you expect this to move going forward. I'm still along the lines of using call options and trading around call options rather than being fully invested, because of the extended levels that we're sitting at. So I'd rather look at call options as a potential. And the same goes for the DJI. Basically, in the longer term, very overextended. You need to be really cautious, although it is probably least overextended of the equity markets when we look at them, sitting just at a 1.618 level. And when we go into the lower time frames, again, we're seeing that same kind of structure, where you can expect the DJI to kind of rally in the shorter term, maybe a choppy week, but still probably make new highs, and then pull back from there, and then have another rally at the highs, depending how deep this pullback is. That's kind of what I'm expecting from the Dow Jones. So, basically all these markets are looking, at least the S&P and the Dow Jones are looking like a short-term pullback and then a rally. And when we look at the Russell, I'm still leaning towards further downside. Structurally speaking, this actually looks more like a bigger ABC corrective structure for further downside, but it is not really clear. When you look at the structure, it obviously has a kind of topping structure, a little bit of a head and shoulders type structure, but it has failed to break lower from these levels. So if we see the S&P and the Dow Jones kind of sell off, you can expect the same from the Russell, and you might find that the Russell struggles to make new highs following that. And then you'll actually be looking at a break and retest of this neckline, and then you might see that pull back strongly from there. Obviously, the Russell being the least stable of all of these indexes, being the higher risk of them. So it's very possible the Russell may have topped out already back in March. But obviously that could change if we continue to rally higher. then we'd have to relook at everything we're seeing here, and then we'd probably look at a complex pattern that would lead to further upside moving forward. So basically the Russell and the Nasdaq are both at levels where we're not quite sure exactly where we're heading from here, but the S&P and the Dow Jones show a short-term pullback and then a rally from there. Depending how deep that pullback is how much further that rally will extend. And then the Nasdaq is not clear, and the Russell is looking more like a topping pattern. So patience is the name of the game at the moment. Just have to see how things are going to play out moving forward. Facebook continues to rally up towards our full targets at 419. Another one that looks like you might see a short-term pullback and then a continuation to the upside. So this might be a good opportunity to get into Facebook when we see that little bit of a sell-off. The structure looks pretty good for upside. Apple, still kind of chopping around. I still see downside on Apple. I still think this is part of an ABC corrective structure, and we will see at the very least a break of 116 on Apple, more than likely following this lower degree corrective structure and a little bit of a sell-off in the markets this week or next week. So we're watching for this to go break these lows of 116 and potentially even lower than that. 103 is another level, and this gap that's still open sitting at 96 is obviously another area of concern. So we'll see how things go there, but I'm still bearish. Apple, Amazon, kind of same category. I still think Amazon needs to go break these lows at 2860, so we can expect further downside in Amazon following this little corrective structure. It's a nice little sell opportunity here, actually, especially a break of this little line, this little trend line. That's a very good opportunity for you to sell, to get traded down towards 280. So some of these tech stocks are looking kind of heavy, and that's why I'm kind of concerned about the Nasdaq. Microsoft, there's no real structure here, so I'm kind of staying clear of Microsoft. It does have potential upside on the shorter time frames. On the daily, it is really overextended on the higher time frames. But if this is a corrective structure that is complete, depending where you look at it, whether this whole thing is a corrective structure and we started to rally from here, it's very possible that we do see further upside in Microsoft, but it is very risky. So that's kind of another call options trade you're looking for, with upside target of around about 338. So that's worth looking at. But it is higher risk, like I said. Netflix continues to tumble and should continue to tumble. I think this is more of a topping pattern than anything else. And like I said, tech stocks just looking mighty heavy at the moment and a little bit concerning. And then when you look at it from a more classic charting point of view, you can definitely see this complex head and shoulders type structure that we're looking at here. So I think further downside in Netflix is definitely on the cards. Google continues to be in its own, playing its own game, just continuing to the upside with no meaningful numbers behind it. It's just really overextended at these levels on all time frames. So trading it is very high risk at these levels. If you want to continue to trade with the rally, I would look for decent pullbacks, potentially one little pullback here, and then buy into some call options that you're willing to lose it all because of where we're sitting. Obviously, a couple of gaps that are still open in Google and a little bit of concerning price action in terms of a parabolic rise that we need to be concerned about. So this is one that could continue to rally another 30%, but could also fall 60% very easily. You just need to be really cautious there. A&D, Advanced Micro Devices. We did speak about this little rallied into our little sell zone, and now we need to just wait for that turn and trade this to the downside, because that is a nice corrective structure that we've seen here in AMD. We were looking for this ABCDE corrective structure to trade and then fall to the downside. Obviously, we could still see this go and break the highs back in 28th of April, and it's still an ABCDE. It just becomes an extended E wave, and then we see downside from there. So we need to be really cautious about getting in too early, because we could see further upside here. But basically speaking, again, head and shoulders type structure, and we should see downside from here moving forward. So just again, watch for the turn, look for your short entries, and then look for that short to trade to the downside. Bank of America, no change, still looking for the structure to trade to the downside and get short, not interested in any longs, and still waiting for that. Potentially a little bit of a turn that's been seen over the last week, but again, very early. It's actually looking like more of a corrective structure for further upside. moving forward. But again, I'm not interested in trading this. Structurally speaking, it's very possible that we go and break these highs at 56 before anything happens, which is obviously a good long trade. But again, very high risk given what we're expecting moving forward. So watch for this to kind of fade, but there is still some upside potential up towards 56, which is obviously a fairly decent move to the upside. Still a good 35% upside potentially, but right in this area is a danger zone of where you could start to fall very strongly. So however you trade this, you have to be really cautious. So again, I think call options is the way to go. Alibaba continues to kind of follow our blueprint. I would like to see a little bit of a rally in Alibaba up towards kind of 250 before looking for the sell. The structure looks really good for that, but it's not guaranteed. Obviously, we could just continue to fall here to the downside, and all of this was just a zigzag correction, and we're just continuing to melt down. So I really want to see a move up to 245, 250, and then for some downside momentum, then you can get into that trade around about 230, and that should give you really good downside, probably towards around about 150 to the downside. So you can see a lot of these charts, I'm still pretty bearish, US equities, except for a couple of sectors. Berkshire Hathaway is another one where we're just looking for that turn and patiently waiting for the turn. And then this little structure on the lower time frame actually looks like further upside. So, but again, not anything I really want to get invested into the upside. It's really, really extended again on the higher time frames. You're sitting in very dangerous areas to be looking for a long trade. But again, as you can see, this could easily get up to 317 to the upside before turning to the downside. So you're in a dangerous area, but doesn't mean we're topping out. It could actually mean we still got some decent upside to come, but it's very, very dangerous upside because the fall following that move is a big one. Beyond Meat, well, surprised by this kind of push higher that we've seen recently, but I'm actually more thinking along the lines that we had the structure wrong, and it's actually more along the lines of a correction that is in play now. So this might move sideways for a little while, maybe start to chop back down towards the lows. So I think we'll probably be looking at something along these lines before we see continuation to the downside. But downside target is still sub 48. So it's just a matter of timing and being patiently and waiting for decent structures. I just think we've gone beyond this, well beyond that to be calling this a structure. So now we have to look at this as a structure on its own, which means it's the first wave, which means we need to just wait patiently to see what's going to develop here moving forward. So something along these lines, and then furthering to the downside. So that'll be a potentially good entry, but it's going to have to be a patient one because we need to take our time there. Citigroup, another one, still waiting for the turn. Obviously, we're heading right up towards our full target at 84 to turn. But again, it's another one that's in a dangerous area for a big move to the downside to come. So you have to be really cautious there. It's a lot of these financials are showing that same thing. CCJ continues to kind of chop higher. Remain kind of cautious for downside here. Again, if the structure is going to play out as we think it is, then we're sitting at extended levels. Very extended levels. But because we've crossed along those lines and we continue to march higher, and what I'm seeing in the commodity index, it's very possible that actually had the structure wrong, and we would have to, in reality, shift this back something along these lines. Something like that potentially. So that was your A wave down. It was actually something like that. This is your A, B, C, that's your C wave down. Now we're just in this wave to the upside. Regardless, if we are in this wave, we're still heading into kind of extended levels, or not extended. It means we could get some pretty decent upside in Camco and uranium moving forward. It's the same with kind of platinum. There's still some potential upside. If we have read this wrong and we still are going to see some more dollar weakness, you might see Camco get some nice legs up towards kind of 26, potentially as high as 40 before seeing the turn to the downside. So that's kind of how I'm looking at the moment, given that we are continuing to rally to the upside. We're obviously very extended on the shorter time frames, given the kind of straight line up that we've seen. But when you look at like I said, the commodity index, it looks like there's potentially some more upside there. in the commodity sector, and if the dollar is going to weaken a little bit further, we can see this. But I still maintain the viewpoint that this is just a temporary rally, and we're going to see a very big dump following this move down towards the lows at 5. So if you are looking to get long, I'll look at resource stocks, especially something like Camco. That still has good upside to come. Gold and silver, not so much, but things like uranium, I think, have really good upside potential here. So that's worth looking at along there to hedge all of these shorts that we have in play. Chipotle. Chipotle was one where we were looking for further upside, but that upside faded really strongly, and then we were looking for something corrective to show downside. This is looking very corrective, although it's really short in terms of the length of the correction. So it's kind of in the middle ground. There's also the possibility this was just a kind of really complex pattern with an expanding triangle in the middle. And then what we thought was the C wave was actually the E wave of the B wave, and then we had another rally up, and then we saw this was the C wave, and now we can see a rally from here. So a couple of options, but nothing I really want to get too interested in. If we start to see some upside here, and then a little bit of a correction, then you could maybe look at some call options there to trade this up to the full target, which would be around about 2219. So quite a big move to the upside, but I don't see how that big move can come into play where the market's sitting at the moment. So it's not something I'm really interested in, just a potential trade that is a possibility. So it's just really cautious there. It's kind of the same with DraftKings, where DraftKings potentially is going to start to form a running flat for downside, but it's also possible that our ABC corrective structure actually started here. You have your A wave, nice choppy B wave, now you have your C wave, and now we're rallying to the upside. That's obviously made a little bit confusing by this wave before us, and a pretty clean ABC before that. So I'm more inclined to look at this as a bearish move, but there's nothing really to trade at the moment. You need to see this correction really form itself quite nicely, become a running flat that actually becomes a break and retest of this neckline of the head and shoulders, and then we can look for the short. So it's traded well for us from the highs, but now we just need to be kind of cautious as to where to from here, and it's the same with Penn. We've got some really nice trades out of Penn in this last leg down, but now we just need to be cautious of where to from here. Is this a head and shoulders that's going to form a neckline, a break and retest of the neckline? Then we can look to trade that, or is this a expanding flat that could rally from here? So just need to be really cautious here, take some profits, and then look for re-entry down the line once we get some clarity. Disney, it's actually looking pretty bearish. It's looking really good. The structure itself, I really like. You can see we have a nice B wave down, quite a big, decent corrective structure. We've got a nice C wave rally, and now I expect to move down to at least break these lows at 150. And then you've got a nice little head and shoulders type structure forming there as well. So I like Disney for a short. Structurally speaking, looks really good, and we should get some decent downside. EA kind of still sitting in no man's land, so not really interested in anything there. Expedia also still kind of sitting in no man's land, although I do see downside here, maybe A, B, C, D, E. And this is actually giving you a decent entry here as a flag, because you have this A, B, C, D, E expanding triangle. Something along these lines. And then you have this little break to the downside, which is a good sign. And then you have this little flag that has potential opportunity to trade. Our downside target remains in that $100 region, where this big gap is open. So I really like this trade, and I think it's definitely worth a look. It's taken a long time to get to the downside, but it just means the momentum or the potential energy has built up for a breakout of this area. I suspect the breakout is going to be to the downside, and if it does break out, it should break out strongly and give us a move down towards that $100 region. So that's a really nice trade. Ford, as soon as Ford looks bearish and looks like it's ready to top out, it just rallies once again. When you look at the higher time frames, the structure itself still looks good for downside, as you can see. It's not the cleanest structure ever, and you can see how we're now approaching this kind of 140 or 1.414 region as a kind of final zone, because if we break these highs at 19. The entire structure is out of whack, and we can't really trade that any longer. And we'd have to relook at the entire structure. So we're at an area where it's really kind of do or die time, and I'm not really interested in any longs at this level. I'm more keen on finding some shorts, and there's no short setups that we have at the moment. So you have to just wait patiently and see what we get moving forward. Going into the lower time frames, you can see this last rally, there's nothing really tradable. It's just gone into really extended regions, extended levels. There's no decent corrective structures. As you can see, the MACD, there's no real corrections. This is not a big enough correction to be part of a decent move higher. So I'm really kind of just sitting on the sidelines waiting for opportunity on the short side rather than anything else. GDX looked like it may have turned. Structure itself, I still remain bearish. Gold is a little bit kind of precarious at these levels. Still chance for downside, but struggling to get any momentum to the downside. So we're just kind of waiting, watching, seeing what we're looking at here. But yeah, like I said, we were looking for a sell in this area, and we're starting to get some downside momentum. So if you want to honor that, then you really want to take a trade to the downside once this breaks to the downside. Goldman, same thing, structurally speaking, still waiting for that trade, but nothing there. I'm still bearish financials, but again, like we said, there's still potential for a chop higher and continuation to the upside. The problem with this move is if we get this move to the downside, which is exactly what we're looking for a short, it actually is a potential for quite a nice big corrective structure for upside. And we could see this rally strongly from there. So I would say if you get this short trade, you want to put a buy above the highs. If you get this corrective structure, then you want to put a sell below the lows of that correction to the downside. But anything in this region other than that, I'm not interested in. I'm just kind of waiting, watching, seeing what comes. Morgan Stanley, same thing. No real correction. But as you can see, we've broken the highs of the higher time frame structure, which puts you in a very, very, very precarious area for Morgan Stanley, because I think the next move down is back into single numbers, single digits. It's a 10x fall. That's what I'm seeing in the chart. And I really think that's what's on the cards moving forward, unless this wasn't a B, C, D, E triangle that is breaking to the upside, in which case it's going to go parabolic. And we'll have to wait for a decent corrective structure on the daily time frame. But yeah, I remain in the bearish camp, very clearly in the bearish camp, just to be clear. And I'd look for that move to the downside and the corrective structure for entry. Other than that, sitting on the sidelines. IBB, our biotech play, is sitting right in our sell zone. So now we're looking for this to sell. Structurally speaking, we've been reading this really, really well. And I suspect what's to come now is a move to the downside. So we'll be waiting patiently for that, looking for some downside momentum. And then getting into the short there. IBM continues to rally right towards our sell zone, really exciting sell zone, because the sell on this one is a really nice one. So you want to get up towards this 160, 170 level, and then look for the short there. Higher time frame structure, still beautiful, still really, really clean, and you can expect a break of 89, 88 to the downside. So again, looking at a 50% haircut in IBM once we get into those levels. Obviously, we can get extended on this one and get up towards 195 to the upside, but we're heading into those dangerous levels as we speak, and we need to be cautious of that. Intel continues to fall, looking pretty good for further downside. I just want to be in a correction. It looks a lot like this is a zigzag correction that wants to go break these highs or close this gap at 62 before falling from there. So you have to be cautious of that. Johnson & Johnson, haven't really gotten into any of our sell zones. I mean, we just barely touched on our sell zone there, and then we started to see downside. It's still very possible that this is actually a sell here, or a structure here that rallies up towards the highs and then falls. All of that now becomes a possibility because of the lack of upside. So I'm still waiting for price to get into either of these zones before we look for any ideas of how we're going to trade it. So right now, I'm leaving it be JP Morgan. Same as all the other financials, just waiting for downside and a correction to short. Live Nation. Looked like we were getting good downside, and then it just kind of rallied strongly. Never broke the highs, which is a good sign. Potentially just an expanding flat for downside, and we're starting to get some downside momentum now, which is pretty good. So we'll be watching this for a move down and a potential short entry. MicroStrategy setting up a nice little flag on the dailies for further downside. I don't see any reason to believe that we've seen the lows in MicroStrategy, especially with what Bitcoin's doing. Nvidia, another one that broke higher, which is actually, it makes sense given what we saw on the structure. So I wasn't quite sure about this little move to the downside and why we were seeing it. And now that we've broken higher, it does actually make sense. So this is a trade we missed out on, or I missed out on. You may have gotten it. And as you can see, structurally speaking, it actually works quite well. Upside targets for this trade, you might see Nvidia continue to rally quite strongly because the upside target is 878. As you can see, we touched on the minimums, but there's no reason to believe we're not going to rally up towards that 878 full target. So there's still some upside there, but as you can see on the dailies, we've been pretty much in a straight line up since the 19th of May. So you want to look for a decent correction, although being said, there's a tiny little flag there that's maybe tradable if this upside potential is going to remain. So just be cautious trading that. Pfizer continues to move to the upside as we suspected. You're looking for this little E wave, and now we've turned to the upside. So now you can start to look for entries. You actually had a little bit of an entry here on the lower time frames, and we should see this continue to rally to break the highs at 48. So this little trade's worked out really nicely for us all the way back from February. We were looking at it. Now we have a nice correction, and we should see this continue to the upside. So structurally speaking, all is well, and it's traded really nicely for us. Riot is another one we remain bearish. Another one just along the same lines as MicroStrategy, setting up a nice short for you there. Ross Stores getting some nice downside now, breaking out of that ascending wedge that we spoke about. Caution because of the potential running flat that's forming for further upside. I just don't believe we're in that zone now. So I'm more inclined to look for flags to trade to the downside. Exactly the same as this one. We're now getting a smaller one of those, and we should see continuation to the downside from here. That's what I believe, given what we're seeing on the higher time frames. Spirit Airlines. This running flat now has looked like it's completed, and now we can start to see downside, and we're starting to get that downside momentum. So after all the mess that we saw early April, early May, we're now getting a little bit of a clean corrective structure and a nice potential trade to the downside. At the very least, we should break the lows of 32, but potential for this to really get some legs to the downside moving forward, and a nice head and shoulders type structure that we're seeing there. So definitely short. Starbucks, another one that's potentially traded. We were looking for this to chop down to the downside and then turn to the upside and then turn into a sell, which is exactly what we've gotten. So we got into that little sell zone. Now we've pushed down. Now we're getting a little bit of a flag. So I think this is a nice flag to trade to the downside, especially looking at higher time frames. This is another one that could really get some legs to the downside and is worth looking at. Seagate, we were still looking for the turn and correction. Potentially had that now. We had a decent rally off the highs, nothing major, but we did go into a corrective structure here that looks like it's ready to break to the downside. So that's another short we like. And higher time frame trade, we definitely love the higher time trade, and this is why we're looking at this trade. I think we're going to go see lows. We're going to see a good like 60% move to the downside here, given the structure that we're seeing. So another one that's really primed to go short. Obviously, potential for further upside and just a short-term correction. You might see this kind of just go break these lows at 90, 91, and then rally from there. That's obviously a possibility we need to be aware of. So I've been moving to break even fairly early on. But if this breaks and continues to the downside, you really want to hold on to that short for the longer term. AT&T finally getting the moves that we were looking for. A really nice big move off the highs, and then a nice little flag that's forming here. So you're looking for your short trades in AT&T, downside targets, kind of sub 20, I believe. Visa remains kind of chopping around. It's actually looking like a corrective structure now. That is going to be a long trade. We spoke about the Visa MasterCard long short. and this is starting to look like the Visa long is going to start paying off, while the MasterCard short is actually still looking pretty decent. There's a nice little flag potential for the downside. So I remain pretty confident in that little hedge trade that we have running there. It still looks good to me, and we should just continue to hold on to that for now. XOM, kind of frustrating. We were looking for the short, and then you got to start to see that short, and then it rallies back up, see another high in the little triple top potential action here, but I'm more inclined to think this is going to continue to the upside with this price action. It doesn't really make sense. Although it is possible that we see downside here. It was just a move down. It's actually starting to look like either a triangle or a topping pattern, so it's very unclear at the moment. So just kind of waiting to see more clarity there. Zoom, strong rally off these lows, which has been interesting. It just means that maybe what we were looking at is a bottoming out in Zoom, because the structure itself was looking for a move down to 220. We crossed our minimum. We got into a kind of 268 region, and then we had quite a strong rally from that area. So it looks like maybe we bottomed out at that level. I don't really see any other option here. Maybe we can look at this as an expanding flat, and we had this corrective structure too early. That is a possibility, but right now there's nothing clear. We just need to wait and see. You just see these numbers here. That's already overextended. So I'm more inclined to think that we bottomed out in Zoom, and we are now looking for a move back up to the highs, given what we've seen. But there's no entry just yet. We're waiting for a corrective structure that gives us an opportunity to get in from there. Lockheed Martin are still bearish, although the structure itself is actually looking corrective for further upside. Kind of complex. You might see this pop back down towards 380 and then head back up towards the highs and then give you another move down, and then all of that is going to be one big corrective structure for a long trade. So that's on a shorter time frame, but on the higher time frame, we're definitely in a region where we expect to see some downside here. So it's a little bit confusing, a little bit messy. Maybe that long trade actually ends up taking us back towards the highs at 440 before we see this move to the downside. It's kind of the structure I'm seeing at the moment. It's a little bit confusing, so I'm just waiting for clarity there as well. PayPal, interesting rally that we've seen from these lows. The structure itself, I still believe, looks like for the downside, although you might start to see this chop back up to the highs, in which case it's actually just turning into an ABC corrective structure for further upside down the line. So maybe a retest of the highs, then a deeper pullback, and then continuation to the upside. But other than that, there's no clarity right now. We're kind of sitting on the sidelines waiting for clarity there. And then Tesla, I still believe we're going to see further downside. I think PayPal is going to follow Tesla lower. I think this is just a little lower time frame correction that will eventually lead to further downside. Once you see this cross below 540, we're heading into what's called the fear phase of the bubble. At the moment, we're sitting at a kind of bull trap phase where you can start to see the bulls buying this double bottom, thinking we've double bottomed, ready to rally, but this double bottom will kind of drop out, and then we'll see a fall below these levels, and you head into the fear phase and the big sell-off. So watch for that over the next few days, maybe even take a couple of weeks for this to play out. As you can see the lower time frames, what we've got here. You're probably going to see this kind of chop around here for the rest of the week, and then see another leg down, and call that a triple bottom, and then might suck in a couple of more buyers, and then all of that will be a nice ABC for downside on the lower time frame. Something along those lines, I suspect, is on the cards, but that's very speculative. It's going to take a long time for that to play out. So, but either way, I remain bearish, and as you can see, it's an impulse correction impulse that we look for on all of our trades, and as part of another impulse correction impulse. So we should see further downside there. So cool, guys, that's it for today. As you can see, remain bearish. Nothing's really changed in that regard. a lot of these charts are bearish. There's a couple of long opportunities to hedge against the generally short bias that we have, a couple more than we had a month ago, but that doesn't change the fact that we remain bearish and suspect further downside is on the cards. So yeah, we'll see you in the members area to look for some trade ideas and look at the ones we're really interested in. Otherwise, we'll chat again soon. Have a great week.